Hi, everybody. My name is Emily Forster, and I am our events and membership manager for the New York State Brewers Association. Thank you all for joining us today for this webinar, of course, with Marcum. We are lucky enough to have what's considered an OSP, an official sponsoring partner, a few of them for the New York State Brewers Association. And essentially what that means is that these companies have gone above and beyond in their fields to really lend their support to the New York State Brewers Association, and of course, all of you. So when you are looking for resources, when you are looking for those folks who, of course, really do want to support you in the craft that you do, Markham is far and away one of the top ones there, one of our favorites. Don't tell the others, but we are joined today by David Oxenhorn, and now he is somebody who really has unique insight as to what it is that you guys go through on a daily basis, primarily because he works for Markham, but he also is a brewery owner as well. So he is outstanding. He is great. He's got a lot to tell you guys today. And for those of you who are watching live, or for those of you who are joining in through the recorded session, I'm going to be putting some links in the chat here about other ways that you can get in touch with the folks who do support us as well. So, of course, our allied members as well as our official sponsoring partners. But without any further ado, Dave, I'm going to kick it over to you. And here you go.
Great, thanks for the introduction. I appreciate it. Just a quick overview, just to let you know a little further background on myself. I am from Marcum. Marcum is a full-service public accounting firm. I'm in Marcum's R&D tax credits group. So the focus of my presentation naturally is going to be on R&D tax credits. I'm also in our food and beverage group, and we're highly involved in the New York State Brewers Association, as well as some of the other guilds, Long Island Brewers Guild, New York City Brewers Guild. Myself, as Emily mentioned, I do own a brewery. Friends and I launched a brewery last year. It's being contract brewed, but I do see some of the things that you guys are seeing. So it's interesting to see things on both sides of the fence now. So have a little experience, definitely on the accounting side of things, seeing things as I'm receiving it from you guys, but also now being kind of in the weeds more of it. So it's definitely been a fun and learning experience. So I'm going to share my screen now. Figure this out. Give me 1 second. So as I said, we're going to be covering the R&D tax credits. I'm going to give just kind of like some real high level overview of things. I believe that if you have any questions, you can put it through the chat. Definitely going to have plenty of time at the end for questions, but if questions do come up throughout the presentation, please feel free to use that chat function to ask anything. Obviously, once the session is completed, you'll have my contact information. So if it's something you'd prefer to reach out to separately, more than happy to answer those questions there too. Oh, I already see there's a chat in here now. Oh, it's just me. Okay, so without further ado, we'll jump in. Slide. So as I mentioned, agenda here, quick overview, nothing too crazy high level. We're not going to get too into the weeds as far as calculations and all the nitty-gritty tax and accounting stuff, but I do want to give you guys a better understanding of the type of activities that are going to qualify for the credit. Obviously, benefits of the credit, why even elect to do the credit. So definitely want to go through that. And then finally go through where things stand just as it relates to some tax law changes that were enacted starting last year in 2022 that affects research and experimental costs, which I'll explain the difference between R&D, research and development, and R&E, research and experimental costs, and how that works as far as capitalization costs, meaning you can't fully deduct those in that first year. But so let me jump in. So and here we're talking about the federal credit. There are state credits. I'll discuss that briefly later, but the focus here is primarily on the federal credit. So it's a tax subsidy. It's available to companies that are investing in innovative things, and those things can vary. From the brewing aspect, it's going to be new recipe formulation, new brewing techniques. You could also possibly have some other areas. I'll jump into that in a minute. But it's extremely powerful for the craft beer industry. We've seen it be extremely successful and yield some significant credits just based on the activities. So a little further explanation as to the type of qualifying activities. As I mentioned, new brew recipe formulations. So you're completely new beer that you're trying to formulate, and then you're brewing it. So the first run brews, also you're working on new processes of brewing. Maybe you're trying to get better efficiencies in the brew house, possibly solve some issues maybe that you're having. Maybe you're having some kind of like dissolved oxygen issues with the beer or other issues maybe that you're trying to work through. It's not as often and it's not as significant as it relates to new brews, but you may have recipe formulation changes as it relates to existing brews. Again, maybe you're working on it becoming more efficient yields. It wouldn't qualify as far as it being something as minimal as maybe just changing out the hops, just like a hop rotator kind of thing. But if you significantly change the existing recipe, but you keep some of the base things, there is some qualifications there. Furthermore from there, so if we go into what expenses, because we talked about the activities, those are the primary areas. Actually, another thing to note, which I didn't have on the slide here, if you're in the process of designing your brew house, or maybe you're expanding it, maybe another area of the brew house, there could be eligibility there just as it relates to the design. So you're using third-party contractors, an engineer, an architect, maybe another consultant who's going to assist you in figuring out the best way to lay out the brewery from an efficiency standpoint, and also to have things calibrated and work efficiently. So in that first period of time, not the training time to necessarily use the equipment, but the time spent working with consultants, your brewing staff, whoever else may be involved, just to figure out how can we get this calibrated properly? How can we get this most efficient? Things I've seen just as examples on that. You're putting in a new canning line, and one aspect is you're having some difficulties with calibration and running brews as it relates to 16-ounce can runs versus 12-ounce. And maybe you're experiencing some losses. So you're doing different runs, and each run you're further enhancing the efficiency on there, less waste, those kind of things. So getting into the qualifying expenses, the things that are going to go into our R&D tax credit pool, that'll help us as far as getting the actual credit: wages, supplies, and third-party contractors. So the wages aspect, it's only going to reflect box one wages. So we can't include anything that's pre-tax, like 401k, health insurance, anything else that's going to be excluded from there. So it's just that box one. And the people that are going to generally fall into there and have qualification, obviously brewers, but it could be other people that are involved in idea generation. So you may have an owner who's involved in those meetings, even sometimes some marketing people. Not going to be a ton of their time. Could be maybe you meet weekly to kind of just figure out, you're analyzing trends within your brewery as well as the industry of what do we want to brew next, and what are we thinking as far as like flavor profiles, or maybe we're trying to reduce costs. So what can we do as far as substituting ingredients, those kind of things. So those individuals could have some involvement there as well. Allocation of their wages. So for instance, if we had a brewer making, just throwing out arbitrary number, $50,000 a year, 20% of their time we're saying is based on R&D activities. So that could be new brew recipe formulation, the physical brewing of those first run brews, all those different activities. Then we would have $10,000 of their wages be allocated into the pool for the actual credit. So once we have that pool of wages that we've allocated based on people's time, then we come 100% of that figure is going to go into what we're able to qualify for the credit. On the supplies side, it's basically primarily going to include our ingredients for our first run brews. It could also include CO2 and some other items. Generally don't include utilities, but may have a component there. It may not be sizable, but water or anything else that's going into those first run brews. 100% of these qualifying expenses are going to go into that calculation as well. And then finally, the third-party contractors. So again, consultants, outside labor. Maybe you have some people that you just contract out to give you a hand with brewing. Even if you have your beer contract brewed somewhere else, you pay that contract brewer to brew the beer for you, and they're brewing first run beers for you, and you're working with them on maybe kind of dialing things in. There could be applicability there. Also new process development. Maybe you brought a centrifuge in, you're working on running some new beers through there to see about getting more efficiencies on that, better yields. Once we get down to that final allocated number of whatever that is for the third-party contractors, whereas supplies and wages are at 100%, the third-party contractors are only at 65%. So 65% of that number is what we're gonna throw into that pool when we get down to the calculations. Furthermore, from there's a 4-part test to qualify any of these items as actual research. So this is where it gets a little more involved, but it's pretty easy to determine what may or may not be applicable. So the 4-part test has 4 boxes that have to be checked for it in order to be qualified as research and then qualify for the credit. So technological in nature, permitted purpose, elimination of uncertainty, and process of experimentation. So technological in nature, meaning that it's relying on some of the physical sciences. Obviously, in brewing, we have a reliance on science, so that's an easy one. Permitted purpose, we're trying to come up with something, a new or improved process or product. So again, those items that we were discussing before, the activities, that checks that box. Elimination of uncertainty, we're not 100% if this is going to work. Generally, obviously, we have a basic understanding of what may or may not work, but there is still that uncertainty that we may have brewed something that just didn't work out for one reason or another, and we have to pour that out. Same thing as far as like a new brewing process. Maybe it's just not gonna, we're gonna result in something that's unfavorable. And then a process of experimentation. So trial and error experimentation, which would lend itself to new brewing. So, we're gonna keep brewing these different beers and then hopefully the end result is favorable. To get further into it, I mentioned before, so we had the wages, supplies, and the contractors. Once we've determined of those, what's allocated towards R&D activities, we have a final amount that gets us to our pool of these expenses, and our benefit could yield, depending on the method we use. I'm not going to get into the nitty-gritty of how those are calculated, but under a simplified method, 7% of those expenses would yield a credit, or under the regular method, 10% would yield a credit. So for easy math, let's just say that we've identified $100,000 of qualifying R&D expenses. That's between wages, supplies, and contractors. It doesn't matter what the blend of that is. We could have maybe barely any wages for whatever reason. We contract pretty much everything out. We don't have a lot of in-house labor. That's fine. So $100,000 of expenses total. So under the simplified method, up to 7%, we'd have a credit of $7,000. Under the regular method, potentially a credit of $10,000. Obviously, just throwing out arbitrary numbers. So these aren't, exact as far as how this would pan out for you per se, but just to give you just like a general idea as you're kind of thinking about what may be eligible in your brewery. Something to keep in mind too, if your brewery is under 5 years in existence, or as well as under $5 million in gross receipts or gross revenues, then you could take a payroll tax election, meaning that say my brewery isn't profitable at the current time, I can elect to take it as a payroll credit. It'll offset employer paid payroll taxes. And for 2023 and forward, it's up to $500,000 in eligible credits annually that you can reduce by. We talked about the benefits. We talked about those estimated figures of say $7,000 or $10,000 credit. So how does that work? So if you're a pass-through entity, meaning your company is set up from a tax standpoint as an S corporation or an LLC, similar to the way the taxable income or losses passes through to the ultimate owners on their Form K-1s, the credit passes through as well. So it's going to go to each one of those individuals, and then from there, it's going to offset personal income tax dollar for dollar. See, if you're set up as a C corporation, the entity is going to take the credit at the entity level, offset corporate taxable income. Someone's just asking a question. I'm just looking real quick just to see. So let's see, how does a credit differ from deduction? All these expenses are tax deductible already, right? Yes, so I'll get into that a little further just as it relates to the capitalization of the expenses, which is required. But correct. So the benefit of the credit is that you're getting the deduction, but you're also getting a tax credit. Tax credit offsets tax dollars or tax liability dollars, income tax liabilities, dollar for dollar, whereas the deduction reduces your taxable income. So it's not a dollar for dollar reduction of tax. So this is on top of that, and that's where the benefit is. But I'm going to discuss a little further on about how it works as far as the deduction with the current tax laws in place. I mentioned before about the payroll tax election. Again, 5 years or less in existence, under $5 million in annual gross revenues. Works really well for startup breweries, especially to get you guys some cash in your pocket now, even if you're not in a taxable income situation. For tax years 2022 and prior, that amount you could claim was $250,000 annually against employer paid FICA. FICA being 6.2% of wages. And for 2023 and future, that was increased up to $500,000, and that's against employer paid FICA and Medicare. Another thing just to note, so let's just say that your brewery is over 5 years old, or you have over $5 million in annual gross receipts, so you're not eligible for the payroll tax credit, but for whatever reason, you're not profitable. Maybe it's just that year, maybe just in general, you're just having a rough patch. The credits can be carried forward up to 20 years, and they can be carried back 1 year. So don't think that even if you're, for 2023 or another year, unfortunately you had a bad year, that you can't take the credit. You still take the credit. You may not be able to utilize it in that current year, whether it's at the personal tax level or the business tax level if you're a C corporation, but you can carry it forward. So let's say 24 is going to be a banner year. You can utilize it there. So you can kind of bank the credits. They last for up to 20 years. Someone asked a question just as it relates to the payroll tax. Is the payroll tax just for brew house associates, for all payroll for the building? So if you are able to elect the payroll tax credit, then it goes against all employer paid FICA and Medicare for years 2023 forward. So it doesn't have to be just, let's just say we had $50,000 of a payroll tax we could use. We don't have to just apply that to brew house employees, or people who are eligible for the R&D credit. It's just a payroll credit that's available to you, and then your payroll service provider can then claim that against the payroll tax on your payroll tax returns. I did mention about going back. People always ask the question, can I go back for the last 3 open tax years, amend the tax return, and then claim the credit? I haven't dealt with, I haven't taken the credit before. I want to go back and do it. So the answer is yes, you can go back and do it. Unfortunately, starting in January of 2022, the IRS put in more strict guidelines where if you're in an instance where you're filing an amended return and you'll be claiming a refund, so let's say that refund is either at the entity level or at the personal tax level, there's like a ton more information that has to be provided. I'm not going to go through all that additional information, but unfortunately, it makes it extremely cost prohibitive to do it unless the credit makes sense. So let's just say we have a gigantic credit, we have $100,000 or $200,000 credit. Then it probably makes sense to go back and do it. We have a $20,000 credit. The cost of the compliance for amending the tax returns, the business return, the personal returns potentially, and then obviously the fees just to go through and get all the information and documentation that has to be attached to the return just makes it prohibitive. So we generally wouldn't recommend doing it just because the cost of compliance is going to outweigh that benefit. And also you're opening up the return. Not that we would say that there's any potential risk there, but whenever you open up the return for an amended return, you're opening up, for examination, where if the tax year just closes out, then they can't open that up back again. Some best practices, because I get the questions about, all right, like, how do we best make sure that we're keeping some records? Because obviously, like, when I'm involved in the R&D tax credits for you guys or any other industries I'm dealing with, it's inquiry and discussion with you guys to figure out the activities. Because obviously I'm not in the brew house, so I don't know specifically what's being done. I have an understanding as far as activities that are going to be eligible. We had those conversations to help you identify them. But obviously, the better documentation that you have in-house, the easier that is for you then to pull that information to provide and have those discussions and further flush it out. So brewers logs are key so that you guys can track new brews, tracking the brewer's time if possible, or those involved in brewing or new processes. It doesn't have to be down to like, okay, Tim spent 2 hours on this brew and he spent 20 hours on this one. It doesn't have to be that exact, but just having a rough idea on a given week what someone's day looks like. You can kind of have some idea of like what they're generally working on, who they're working with on the team. Everyone on the brewing staff may not be eligible or involved. Cellarmen, other people that may be just involved in packaging may have a very small or no involvement in R&D. Obviously, those discussions are helpful for us to determine that, but it's not necessarily that everyone in the brewing staff or that's involved in any kind of brewing activity is going to be eligible. Utilizing a software to help you keep organized. I've seen some people use orchestrated beer, which is really good. QuickBooks or whatever software you use for brewing as well as like bookkeeping is helpful just to kind of keep that analysis in place, be able to export that so that we can analyze it and have those discussions with you. So I mentioned that it's primarily talking about the federal credit here. There are many states that follow the same rules as the federal, and you might get a credit there if you're doing operations outside of New York. Unfortunately, New York does not have an R&D tax credit. But let's just say you have multiple locations, or you're doing some things out of state for one reason or another. You have some activities there, and you have some payroll out of state or some expenses. There may be some eligibility there. Obviously, that would also take into account if you're filing there, if you're required to file there from an income tax standpoint to be able to benefit from the tax credits in those other states. So I ask the question as it relates to, all right, so does the brewer's time count if it's an owner who's taking owner draws versus for income versus W-2 payroll? All right, so and then there's another question. So the first question about that, so draws or distributions of profit, let's just say it's an owner brewer, those aren't eligible. It has to be compensation, meaning it's got to either be W-2 payroll, or if it's an LLC owner and they're taking a guaranteed payment, the guaranteed payment would be applicable. Or if they have self-employed income. So let's just say the profit for the company was $100,000. Owner one owns 50%, owner two owns 50%. Let's just say they're both involved in the business. That $50,000 of self-employment income that's taxable would be eligible for allocation if they're involved in R&D processes. Second question, and is only the time spent planning the new brew, or does it count time actual brew house brewing? So both count. So planning, so we're having the discussions, we're formulating the recipes, and then the actual brewing counts. It's just going to be for new brews, or if we have like a significant change as far as an existing brew, it's not as often, but generally, but there are some instances where that would be eligible. But most of the time, it's new brews, new processes, or improvements are gonna count there. But both aspects of it, both the planning aspect and then the actual brewing. But it's only the first run of it. So let's just say we're making a new IPA in January. So the planning, the brewing, all that is included. That's all eligible. We brew it again in February. It's no longer eligible to be included as eligible R&D unless we've changed something on there of significance. So we completely revamped the recipe with the exception of some of the base grains, and we've completely changed the brewing process, or we're really working on honing in on something. There may be some eligibility where that might have been eligible at 100%. Maybe now it's only 10 or 15% because most of the uncertainties kind of in wiped away because we've done this before, but we are making some changes. So we do analyze both of those, something to keep in mind if it's something that you have existing brews and you are making some changes too. So the next part I want to get into, someone asked a question earlier about the deductibility, the expenses, and then the credit. Obviously, as I mentioned, the credit is on top of the deductions, so it's a double benefit there. But there have been changes just as it relates to the deductibility of the expenses, and that's regardless if you take the credit or not. So I'm going to give you just a brief overview. So the way it used to work with R&E, the research and experimental costs, you either could deduct them in the tax year, so payroll, supplies, those contractor expenses, you just expense them in the tax year, or you could amortize it over a 5-year period. Obviously, most people opted just to take that deduction. Let's just get the expense up front. But unfortunately, there was a tax provision put in place starting January 1st of 2022, where we have to capitalize those expenses. And this is regardless of taking the credit. So, I got the questions in the brewing industry as well as other industries of, well, we just won't take the credit. we'll just keep expensing everything. It's fine. Unfortunately, you can't. There are different code sections that dictate this. So whereas the R&D tax credit is an election, you can choose to take it, you can choose not to take it. Capitalization rules are required, so you have to do it regardless we take the credit. So we, starting last year, we obviously want to make sure that we're getting benefit for the credit to help offset any resulting tax from that. And also being cautious to try and optimize the credit, but also mitigate tax, because the credit aspects in here that are similar as far as the expenses that go hand in hand with what needs to be capitalized, but the capitalization is even more expansive. So as I mentioned, you can't immediately deduct those research and experimental costs. I'll explain what those are in a minute. Amortization, pretty much everyone here, I would think, isn't doing anything overseas, so we're just going to refer to domestic or US expenses. That's over a 5-year period. And that 5-year period in year one is the midpoint of the tax year. So what that means is you only get a half-year deduction. So let's just say we've identified $100,000 of research and experimental costs. We have to amortize those over 5 years. Year one, we only get $10,000 of a deduction of those expenses. And nothing to do with the R&D credit. Doesn't change the ability to claim it. Doesn't change the ability to use it. But we do have essentially $90,000 of expenses that are still being amortized, that'll be deducted year over year. The amortization deduction is going to continue even if we say, okay, we're just closing up shop and this isn't working out. We still got to keep amortizing until we get through that 5-year period. And so I mentioned R&E versus R&D. So R&D tax credit we talked about, and that's dictated under Section 41 here. You'll see it's mentioned wages, supplies, contract research. Computer lease cost isn't really applicable for most of you guys. Section 174 is what dictates what we need to capitalize. So it's going to be all those activities and costs that are involved in the R&D. So it's going to include wages, supplies, contract research, etc. But it's also going to be a lot broader. It's going to include those things I mentioned before. For wages, we can only do box 1 wages. So anything that was pre-tax in an individual's wages, we couldn't include, which would be in box 5 of the W-2. So unfortunately here, we have to capitalize those expenses. So the 401k, the health insurance, the larger gross wages is going to get capitalized versus that smaller amount. Same thing goes with applicable payroll taxes. Payroll taxes aren't included in the R&D credit calculations, but they are included here. Allocation portion of other overhead costs, portion of rent possibly allocated based on a pro rata basis of your square footage, brew house to your tap room. Everything has to be done on a reasonable method, so we determine what that looks like as far as rent, utilities, other items that aren't eligible to give us the credit, but are required here for capitalization purposes. So as I mentioned, these amounts are going to be a lot higher than they would be just for the R&D credit. So on our example, we had $100,000 of R&D tax credit expenses from the wages, supplies, and contractors. That is going to be higher, so we have to add back additionally the higher gross wages, payroll taxes. The other thing I mentioned before, that only 65% of those allocated contractor expenses are going to be eligible for the credit. Well, unfortunately, for the capitalization rules, whatever we've allocated is at 100% for capitalization. So say we have $100,000 of contractor expenses that we said is related to R&D. For the R&D tax credit calculations, we get $65,000. But under the capitalization rules, so the expenses we have to capitalize and deduct over time, we have to add back $100,000 of that. So it's not keep in mind, it's not a loss deduction. It's just, you'll eventually catch up after the 5-year period. And obviously you have the credit to help offset tax as well. It's just a timing difference. Think of it similar to depreciating a large asset, fixed asset, so the brew house, or if you own the building or did leasehold improvements. It's the same kind of thing there. So it's not a loss deduction, it's a timing difference. So last year in 2023, there were a number of bills out there. So no one likes this. This isn't favorable. to the brewing industry as well as anyone else involved in R&D. The purpose of the R&D tax credit was to help promote people doing innovative things in the US, give them a tax credit for doing so to encourage them to keep doing that. This is actually punitive in the sense that, again, it's a timing difference, but you're having items that were originally allowed to be 100% expensed in year one. Now you have to add those back and capitalize it. So a lot of opposition to doing this. It seems to be that this was put in place as kind of like a budget balancer. I don't think there was ever any discussion that this was going to go through. I didn't mention before, but this provision was put in place in 2017 that was going to hit in 2022, but I feel like it was just put as like a placeholder until they kind of figured things out. Unfortunately, no one had any idea that COVID was going to happen. A lot of money went out for that, and it seems like they had no choice but to leave it in there just as a revenue booster. But there's opposition on both sides, both parties to repeal or defer it. So there was a number of bills that came out during the year. I'll go through each one of them briefly. Unfortunately, no further movement on it. So 2022, we were hopeful that one of these bills would go through, repeal or defer it. Didn't happen. We're past 23 now and into 24, and it doesn't appear that there's too much traction for anything to move. Government's been really slow. But we're still hopeful that this will either be repealed or deferred. When that is, we don't know. So the first bill that came out in March of last year, American Innovation and Jobs Act. Again, it was proposed by Senate. It was introduced, but wasn't any further movement. The proposal there was a full repeal of the capitalization requirement, so it would go back to the way it was previously, where you could just fully expense it. So obviously that'd be great. Additionally, what they were trying to do with that bill was increase that payroll tax credit aspect. So I mentioned before, 2022 and prior, that was at $250,000 you could take annually, bumped up to $500,000 in 2023. The proposal there was to further increase it up to $750,000 over a 10-year period. So in this instance, they were looking for, let's go back to the way it was and actually make things even better for those companies that are in startup mode. And this would be effective starting after 2021, which means that 2022 is essentially you could either go back and amend, or they're hopeful this would have gone through before filings were completed, and it wouldn't even have been an issue. But unfortunately, no movement on that one. Next act, so we're in March, then we step forward into April, the American Innovation and R&D Competitive Act, proposed by the House of Representatives. Again, introduced, no further movement as it currently stands. This one proposed to repeal of the capitalization requirement, and it was effective starting in January of 2022. So it would repeal what was in place there too. No movement on that, unfortunately. And then the last one, which was even later in the year, mid-year, June of 2023, the Build in America Act. So they're looking to retroactively suspend it. So essentially defer this until after December 31st, 2025. So that means that for 22 and forward until we got past 25, we'd be back to where we were. They were additionally putting a provision in place to offer like a retroactive treatment. So you'd either have the option of amending 2022, or in 2023, you could just expense it fully that year. So let's just say in 2022, we identified 100,000 of expenses capitalizing. As I mentioned, it's a 5-year mid-year convention, or you only get that half-year deduction. So $10,000 of expense in 2022. So we'd have $90,000 still sitting to be expensed over time. They said that if this were to go in place, got to go back and amend, so change it back and just expense all 100 in 2022. But then we obviously have to open up those tax years, file amended returns for the business and personal returns, or in 2023, we just expense it all then. So that full $90,000 just gets expensed in that year. So if this one were to move forward, and the recommendation would just be expensed in 2023, one, so we don't have to open up the tax years and amend the returns. And two, just because the amended tax return process and the refund process is extremely slow, as opposed to a timely filed return, which is a much faster process. So I'm gonna look at the, see if anyone has any questions. I kept it pretty brief. Again, just want to keep it high level. But if you have questions, feel free to put it in the chat now. Otherwise I can go through just a couple last things before we wrap up.
So feel free to put those questions in the chat, or if you want to just pop off mute and ask them as well. In the meantime, I just wanted to thank Dave for your time. Of course, remember, guys, Marcum is an official sponsoring partner of the New York State Brewers Association. They have really positioned themselves to be in the best position possible to help you. And you should absolutely use him as a resource. If you do have any questions, please be sure to ask them. And of course, I dropped those links to the official sponsoring partners directory as well as the allied members directory in the chat. So if you're looking for resources for whatever it may be, those are the folks and those are the companies who have really positioned themselves in a show of support to New York craft beer and to you guys in general. So make sure that you're looking at their offerings if you are looking for certain resources. And Dave is still here to answer any questions if anybody has them. Looks like we've got one in the chat here, Dave.
So for utilities calculation, you said we could count CO2 and electric gas. Can we count water as well? How do we calculate that exactly? So yeah, we could put a component of those in as for the calculation as it relates to those first run brews. Calculation of it's going to be an estimate. I mean, obviously, as far as the water aspect of it is a little easier. CO2 is probably a little easier to quantify. Electric and gas is a little tougher to figure out. I mean, depending if you like what your meters are like, if you have an idea of how much usage there is for the equipment and things like that. Oftentimes it may not amount to enough, or we can't quantify it well enough that we feel comfortable to use it. So we may just defer to things like that are easier, like CO2 or water. And again, they may not be big dollars, but it really depends there of how much documentation we have there and we'll feel comfortable with.
All right. If there's nothing else, oh, we've got one more.
So the credit is only available if the business is profitable for the year. So no, so if the company isn't profitable, you can still take the credit. You just may not be able to utilize it during that tax year, but it can carry forward for up to 20 years, or you can carry it back 1 year if you have a taxable year the year prior. So it is available to you even if your business isn't profitable. And as I mentioned, if your company is under 5 years old and under $5 million in gross revenues, then you'll have eligibility to take the payroll tax credit, even if you're operating in a loss. So it's something to keep in mind if you're a new brewery.
Awesome. And now, of course, if you think of any other questions, Dave's got all of his contact information, of course, up on the screen, as well as our directory. And they're going to be at the conference, the 2024 Brewers Conference in Albany. So any other questions from you or your brewery, you will be able to find him there as well. Of course, that is if you're attending, which we all very much want you to do. So registration is open for that. But if there's nothing else, Dave, we wanted to thank you so much, of course, not only for your time today, but being an official sponsoring partner of the New York State Brewers Association. And yeah, we hope that everybody has an outstanding day if there's nothing else.
Thanks.
Outstanding. All right. Hey, thanks, guys.